Now let's do a preview for the Fed meeting minutes today. So these are meeting minutes for the July meeting. Okay, in July we had no press conference and no new forecast. We only had the statement. What did we see there? The Fed did acknowledge the improvement in the US economy. Okay, so we already know that growth was, well, slightly better, nothing really strong, but there was some improvement. Some figures have improved. Also, the non-farm payrolls report for June was better. Okay. Also in June, not only in July. What we could have when we have a meeting, when we have minutes that come after a meeting with no press conference, no new forecast, the minutes you tend to move markets a bit more, okay? Because they shed more light, they pour more information that we didn't know. Meetings that do have a press conference and first forecast sort of, they already spilled the beans. So this time the minutes could be more interesting. Secondly, I want to remind everybody that each time I say it with the minutes, in theory, these are minutes of the meeting. This is sort of a raw protocol of what was discussed back then. That's in theory. In practice, the document, the meeting minutes, is a document that is revised, redacted until the very last moment, until this week. That means they could shift the tone just a bit to reflect recent events in markets, okay? Doesn't mean they said, okay, we know that the NFP is going to be strong, and it was great, and we know that retail sales are going to be weak. No, it's not going to be that direct. But they could be a bit more hawkish about the economy, a bit more dovish. So I think anything can happen. So I would expect them to be relatively more hawkish because of the NFP, be a bit more upbeat on the economy than the statement, and perhaps support the US dollar. Again, this is not guaranteed. The Fed always says on one hand, on the other hand, on one hand, on the other hand. So we could also have it now. Last meeting minutes release, it was for June. It was quite a snoozer. It didn't move markets. Anyway, but I have higher expectations this time. Minutes again could relate to the non-farm payrolls. I don't think there's going to be a rate hike in September. The chances are quite low. Show you here the Fed Watch expectations. So after some comments again by Dudley, the chances moved up to 15% from about 8%. 9%. It's still very insignificant. It's still even in December already there is a chance of a rate hike because that's after the elections, I think, more than anything else. But don't expect anything big. Another thing to watch out for is minutes tend to balance the statement. So if the statement last time was only mildly upbeat, only they paid lip service to the improvement in the economy, but basically they were quite cautious and did not hint of a rate cut. This time it could be a bit more hawkish. And maybe the rest will wait for Jackson Hole. So at the end of the month, actually next Friday and Saturday, we have the Jackson Hole Symposium. Jackson Hole is a beautiful place in Wyoming, in the middle of the United States of America. And we have there a gathering of central bankers, most importantly, Janet Yellen. And in the past, her predecessor, Ben Bernanke, used these events to hint about monetary policy. Janet Yellen, in the past few years, did not take these opportunities. So it could be, again, a snoozer. But markets, you'll hear many analysts say, okay, that was not important, the meeting minutes, but wait for Jackson Hole, okay? But to conclude, what I think is that it'll be slightly more hawkish this time because of the non-farm payrolls, but no real hint about a rate cut, perhaps a very minor boost to the US dollar. Remember, it's released in the middle of the US session when London is closed, Tokyo is closed. So the first reaction might be relatively shallow, and then we'll have a second reaction in Tokyo, and the biggest reaction in the European morning. Okay, so that's the Fed minutes preview.